Shridhar, very good being with you here today. We are just talking a few minutes ago about the market, and I said, you know what, let's get that on the camera because we have very interesting views, and I would like to spread this information to our foreign investors and to the whole world. But before that, can you tell us a little bit more about Greenbase?
Thanks, Gustavo, for having me here. And I think GRI Forum in India is doing a very good job of getting this industry people together. Greenbase is a platform between a renowned Indian brand Hiranandani developers along with the Blackstone, the large fund, as all of you know, which is a platform for industrial logistics and warehousing. We have close to 700 odd acres, translating to about 15 million square feet as a business plan. And we are in a JV with a partnership of 50-50. And we develop these logistics, industrial, and warehousing spaces and do it on a BTS basis. I think it's a very interesting and growing space in the Indian context, and especially with the Asian markets, you know. And we also become a very big hub for logistics and supply chain, which actually ensures that we are able to develop um, these spaces pan India. And so we have currently, out of the 15 million, we have more or less completed 5 million square feet of built and leased, and we are in the balance 2-3 million is in the development stage as we talk. We are also simultaneously acquiring new land parcels across different parts of India to develop assets in this asset class and put it in the platform.
Very good. I want to talk about India as a macro economy and as an opportunity for foreign capital and domestic capital as well. When you look at the scenario with so many challenges happening in Europe, in the US, the conflicts in the Middle East, the Russia and Ukraine war, do you think that India becomes even more relevant as a natural destination for foreign capital?
I think India has been attracting a decent amount of foreign capital, I would say, in the last 4 or 5 years, except for, past the credit squeeze and past the Ukrainian war. India comparatively is well positioned as compared to the other allies around in the Asian context because it's emerged as a very strong developing economy, number one. Our GDP growth rates reflect that. And I think there's a lot yet to develop, which is the beauty and the opportunity about India. The opportunity in India is all about that you've got a huge consuming class of people who are yet to get the world class infrastructure, etc., so which you need to build. So there will be a huge demand, and I see the logistics, industrial, and warehousing asset class really uh, among the various real estate asset class growing at a much faster pace purely because of the gap in terms of demand and supply. Number one. Number two, I think with the current economic scenario in terms of the interest rates or oil prices, I think if that is a small blip, but will it impact India substantially? My answer is no, because we have been past the Ukrainian conflict, we are past the China-US cold kind of a relationship, India-China issues. I think now the globe doesn't cannot afford a war, so there has to be some economic consensus, and at best these all would be a short-term blip of 3 to 6 months, and by which time you need to figure out a peaceful way of resolving this crisis. And coming back to economics, I think that should get factored and should be more centered around the country's domestic growth and domestic economic data. Like India currently is tracking close to 6.7 to 7% of growth, and is it with reasonable confidence? I think yes, because I think the gaps are getting filled. You are the largest English speaking, uh, maximum amount of engineers, technology hubs coming up, the amount of startup investments are seen. So I think there is a huge consumption class, and there is also a huge increase in the domestic capital which is come into play in these sectors. So along with the foreign capital flows, which I don't see a huge issue, because people are looking, given the scenarios in Europe or US at this point in time, if you want to get the maximum bang on your buck as an investor, you're looking at markets like India. So I don't see a huge problem in attracting foreign capital. Obviously, there are risks of interest rates and the foreign currency risk with the rupee dollar, but I think that's been there historically. So you budget in your 2 or 3% of depreciation in that, and then you're able to move along. But what you inherently have to see is the growth in the economy, the growth in the country's GDP growth, uh, and the availability of even domestic capital to spur growth in this sector. And we have only scratched the surface in terms of the grade A, like what we saw a huge boom in the commercial real estate office space. In the industrial logistics and warehousing, while it's a low hanging fruit, I think there is a huge amount of grade A assets to come into play in this sector. And as times go by, in the next, I think the window is the next 7 to 10 years, that I will see a reasonable growth. It could be in the range of 10 to 12% growth I see in this segment, based on all data that I see, and addition to the existing grade A logistics and warehousing and industrial spaces. We at Greenbase, while we have a platform which is doing close to 20 million square feet of development, we have recently also planned to increase our capital outlay in the southern part of the country, which is in South India, Chennai, Tamil Nadu, in the southern states. We, to the extent of another $200 odd million between us and Blackstone, and we see a huge amount of growth also because a lot of manufacturing and supply chain, global supply chain hubs are shifting to India, and India can deliver large operational excellence centers which can supply the global market from an export perspective. So if you put all these pieces together and look at India, capital flow, I don't think so there is going to be a big issue in terms of capital flow, because finally capital has to find its return perspective, an adequate risk adjusted return, which India will probably give. Second, in terms of the development and growth potential, India's has seen that there's an adequate demand for grade A industrial logistics and warehousing assets going forward. Is it going to give you phenomenal returns? Like, I think it's a stable asset class, and that's why I see industrial logistics and warehousing asset class also being REITable, getting into the form of REIT. So there is a decent expectation of it performing in a range of between 18 to 20 odd% IRR kind of scenarios, and I think that's a decent return because it will give you anything upwards of 10 to 12% dollar return. So that should attract the foreign investors, because as you don't see much opportunities like that for the next few years in Europe, which is going through a um, you know tough cycle given the in terms of growth and in terms of interest rates and availability of liquidity and investment options. Similarly, the domestic front, I think there's a lot of capacity and a lot of growth that needs to be
But
happening.
is there anything? I can see the scenario is very positive, and you just go around in India and you see so many construction, so much infrastructure. It's amazing. It's completely in a different cycle compared with Europe or the States. But is there anything that keeps you up at night? Anything that would concern you?
Uh, while I said all the great positive things about getting these investments into India, I think I must also be circumspect in my view when I say that while India has this landscape of growth and opportunity, there is also equally challenging given the recent Ukrainian war, oil prices going up. So there has been a one is the normal organic and the inorganic spike in terms of inflationary conditions, just taking the cost of doing business in India up. So this sector is obviously seeing short-term challenges in terms of margins in this business, especially with the, I mean, people thought that land will become cheaper. I don't see land getting cheaper, which is close to 25 to 30% of the cost of this business. The cost of construction have gone up to more than 15 to 20% given the rise in the cost of cement, steel, and especially because of the commodity inflationary trends post the Ukrainian war and oil prices zooming up. So I think the new norm is now that you are working at a cost which is 10% and above. And then plus given the current establishment, cost of doing business in India as overall has gone up. So so this has got a direct impact on the expectation of returns. So while customers on the other end need to also move up the value chain in terms of repricing the value that they want to pay for a grade A warehouse or a grade A industrial built to suit, I think that is something which we need to work on. And I feel probably this would happen not so very soon, as market has to pivot itself and find the equilibrium. So I think it will take some time for us to find that space wherein which we can operate. And in this business, I think it is best that consolidation should happen, and scale will matter as you go along.
Shridhar, thank you very much for your time. Great speaking to you.
Thank you very much, and thank you to be part of GRI, and really wish you all the very best in this conference today.
Thank you.